This week, we're talking cattle on feed numbers, livestock slaughter, and the reinstatement of that July cattle inventory report. Welcome to the Weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner. With us this week to talk all things markets and reports, Mississippi State University Extension's Josh Maples. Josh, great to see you.
Hey, Megan. How's it going?
It's good. It's officially springtime, so happy spring 2025 to you, which means everything else is getting ready to ramp up and green up as well.
Exactly. It really is an exciting time of year for all parts of agriculture, but I know our cattle producers are getting pretty excited about maybe the end of hay season.
Yes. All right. So we're going to talk about those reports. We'll get into the significance of getting that July cattle report back. But first, let's recap another wild week in the markets.
Sure. Let's dig in. So looking at market highlights, live steer prices into the week at $209.15 per hundredweight. Now, this is the 5 market average. Megan, this was up $3.85 from a week ago. The April live cattle futures contract was up $4.05 from a week ago to $207.23 per hundred. And the April feeder cattle futures price was up $4.50 per hundred on the week to $285.70. Choice box beef cutout was at $325.52 per hundredweight at the end of the week. This was up nearly $6 from last week. On the hog side, cash hogs down a little bit, down 19 cents to $87.07 per hundred. And February lean hog futures were down 58 cents to $86.05 per hundred on the week. The pork cutout value down 77 cents from a week ago to $96.24 per hundredweight.
I want to talk about these cattle prices. So as I talk to some sale barns throughout the country, you look at some of the weighted averages, records, and that's just, it's not something that I think is like what we hit records, we pulled back a little bit, we've been climbing again. How realistically, or how is there concern that these record high prices are going to hit a top and then it's free fall, or what are some things that you're thinking about in terms of watching these prices hit record highs almost week after week right now?
Yeah, that's a good question, Megan. And honestly, it's kind of got to the point where saying the word record doesn't even do it justice, because we say it so much because they're going up. But, if you compare this back to 2014, 2015, we're sharply higher than those prices were, even the highest prices that we saw then. So when we say record prices now, we're in completely new territory. There's always concern. At some point, this market will find a top. But at the same time, we were kind of saying this through 2023, 2024, as these prices started to climb. This this expectation, hey, one of these days this is going to drop. We've been talking about that for 2 years now, almost. But I think what we're really seeing is these underlying fundamentals playing out. We were talking about it through most of 2024. We had really strong prices. We had record prices last year, but it still didn't lead to the heifer retention. It didn't lead to the herd expansion that high prices are really signaling. And to me, Megan, that was kind of telling us, hey, these prices are not yet high enough to really spur along that expansion. And so I think we're starting to see that. I think, I was really scared to say that last year that, hey, these things are going to have to go higher. But I think they had to. And I think we're seeing that now. But it's across the board, Megan. It's not just feeder cattle prices. Cull cow prices are incredible right now. And so we're really, really seeing some strong prices for cattle of any class, any weight.
And we'll talk probably a little bit more about this coming up, right, as we get into cattle on feed numbers and what this means overall for prices. Let's talk weekly slaughter. Weather, a big issue this week across the country on both the movement on both the cattle and hog side of things.
Sure. So this week, cattle slaughter down, or it was at 560,000 head. This was down about 4%, or about 24,000 head from last week. And if we compare it to a year ago, down 33,000 head. On the hog side, hog slaughter came in at, or is estimated for the week at 2.428 million head. This is down 81,000 head from a week ago and down 93,000 head from the same week in 2024.
I know weather was an impact and an issue this week, but as we look at like cattle slaughter numbers, are you monitoring because it seems like the trend has been we're running lower than we were a year ago, which I wouldn't think is a huge surprise, right?
No, it's not a huge surprise. And we've got the monthly data out now too that we can dig on a little bit, but lower cattle slaughter numbers are kind of what we're expecting, right? We've got tighter supplies of cattle. It has to eventually play out to see these lower slaughter numbers. And so I think that's something you and I are going to be talking about quite a bit this year.
All right, let's start cattle on feed out on Friday. I'm going to take the headline from you, and then I'll let you get into it. Placements is a number we've been watching, and down significantly from where we were a year ago. And then I'll let you kind of get into the data, and we can get into some Q&A about that report.
Sure. Yeah. Placements down 18%, which is kind of a shocking headline. I do want to unpack that a little bit here in just a minute, but let me hit the key points here. So total inventory in feedlots that have at least 1,000 head capacity. So total inventory in those feedlots, 11.6 million head. This was down 2% from March 1, 2024. Placements, as we mentioned, was the big drop, down 18% from February 2024. Marketing, so fed cattle marketed during February of this year was 1.6 million head. This was 9% below February 2024. And if we kind of just jump into the placements real quick, Megan, and then I'm sure we can have a little bit more discussion here. But that 18% number is shocking, but it was not unexpected. Pre-report estimates kind of had us in that double-digit drop. This was analysts were looking at the data coming in and expecting that. This was a bigger drop than the average of those analyst expectations, which was expecting around a 15% decline. But there's quite a few things in play here. One of them was not even a this year thing. One of the big things is what happened last year. And so the February numbers that we're comparing to from 2024. You remember 2024 was a strange winter when it comes to placements. We had winter storms that really shifted cattle movements, and so we're comparing to a bigger number last year, which makes the drop this year maybe look bigger than it would have if we were comparing to a more normal February. The other side of this, Megan, is there was one extra day in February in 2024. So February last year was leap year, so that's one extra business day. Obviously, that doesn't make up 18%, but it's at least one piece of this. You combine the dynamics from 2024 with the fact that we had fewer feeder cattle going into feedlots this year just on a weekly basis, and that's how you get to this 18% drop.
I had to go back and look yesterday when I saw it, because I knew pre-report expectations had a really wide range too, right?
Yeah.
Like 21% decline was the greatest, and had to look back at February of 2024 because I was like, oh, that's the month that kind of threw us for a loop a year ago. So my question is, Josh, as you look at these significant declines in placements, is this kind of what we've been waiting to see overall? And is this more of the expectation that we could see significant drops in placements moving forward?
Generally, yes. And I think that's what's going to be really interesting this year. The tighter calf crop numbers and the tighter feeder cattle outside of feedlot numbers, Megan, that tells us that we should see fewer placements as we kind of work our way through this year, just in general. Now, the timing of it can always be wacky, right? And, you can have things like storms that impacted 2024. You can have really strong market conditions that maybe pull some more cattle in during a particular month, but then you see less the next month. So, we got to pay attention to when we look at this. We can certainly still see some months throughout the year like this one that looks like a really big drop, or we may have months that doesn't look like a big drop at all. But on the whole, we're expecting fewer cattle to go into feedlots. And the other piece of this is if we do really start seeing some heifer retention in 2025, then that means that the heifers that have been bolstering this feedlot supply, heifers really have been a big part of the placement story. They always are, but they've been a really big part the last couple of years. If some of those heifers start getting held back to be productive members of the herd, then that is kind of an extra decline in cattle that are available for placements compared to last year. So, yes, I think we're going to be talking about declining placements for a lot of the time during 2025, given the scenario that we're already set up for.
We've talked a lot about these record high price levels that we've been at. How concerning is it knowing that export markets bring added value to these cattle? Thinking about like offal being exported into China, for example, that if there was trade disruptions, it could have a negative impact on the prices that we're seeing.
Yeah, it's absolutely concerning, and I don't want to undervalue that or anything like that. But I think what's really driving this market right now, Megan, is the supply side. I don't. Beef demand has been really strong. That is an important part of this. It's always a balance of supply and demand, but I don't look at this market and see it right now, the prices we're seeing for cattle being a demand pull type environment. I see it being a supply driven price response. Now, again, it's way more complex than that. It's certainly both of them. But I say all that to really make the point that, yes, exports are critical to this industry. Exports really do add value to the cattle and to the beef that we produce. But I don't think we're going to see the response on cattle prices like we would if this was happening in 2020 or 2021, just because there is such strong support for these markets from the supply side of the equation.
Livestock slaughter also out this week, and the one element of that too, I'm assuming that we're continuing to watch, is what beef cow slaughter does as well. But as you look at overall that monthly slaughter, talk to me about production for red meat.
Yeah, so the monthly slaughter report came out and kind of tied into our discussion on the weekly stuff. The February cattle slaughter was at 2.3 million head. This was 11% lower than in February 2024. So this gets us kind of beyond that weather challenge of the week. If you look at the monthly level for last month anyway, it was lower. Cattle weights, again, a big thing here, Megan, up nearly 50 pounds from a year ago. The average live cattle weight was 1,432 pounds during February. Just incredible. On the hog side, hog slaughter totaled 10.2 million head. This was a 7% decline from February 2024, and hog weights were up 1 pound to I think 200 and I don't have it right here in front of me, but they were 200. Let's see here. 291 pounds. So if we look at total commercial red meat production, I think this is going to be another thing we talk about this year, certainly on the cattle side. Red meat production was at 4.2 billion pounds in February. This was down 7% from where we were in February of 2024. So, I think that's one of the things that we see tighter supplies of cattle. We see these slaughter numbers coming down. Now we do see weights going up, which is helping our beef production totals. But I think we're going to see some smaller beef production, smaller total red meat production, just given the supply setting we're in.
How much does that put emphasis on the importance of sustained demand, whether it's domestic or export demand, and being able to support prices at the levels that they're at now?
Yes, it does. And if you think about prices relative to other options that consumers have, I mean, you think especially ground beef, do we see consumers not necessarily that they don't demand beef, because it's tricky to talk about demand just because a consumer, sees a price and then chooses something else. That doesn't mean they don't demand beef, because demand is both quantity and price. And so I think it's going to be interesting, and we'll probably talk about this multiple times, but we're going to see per capita beef consumption go down, just like we did in 2014, 2015. That does not mean that beef demand is necessarily eroding. It means that people are making choices, and so they may still have really strong demand for beef, but at that particular price, they quantity demanded at a particular price is different than their overall demand. So I think it's going to be really important to kind of track how consumers make choices. And you mentioned the export side. Whenever you have tighter supplies, being able to continually provide the supplies that your export partners want is really important. So it's going to be really interesting to see how that plays out this year. Again, I do think the heavier weights are helping the overall beef production numbers. But for some of the individual cuts, especially the individual cuts that, weight doesn't necessarily affect the number. It affects the size of that brisket, but it doesn't give you it doesn't give you 4 briskets, So it's going to be interesting to see how that works out this year.
I'm not going to lie, I would not be sad to see discounted. Like in 2020 during COVID, my husband was buying briskets for I can't even remember how incredibly dirt cheap they were. And It was like prime brisket because there wasn't a market for it or whatever. And so we were grinding brisket and we were smoking briskets like every other weekend. He very much perfected his barbecue skills during COVID.
And nowadays it's expensive for him to continue perfecting those. But that's a good example, Meghan, because, briskets are one of those. It's kind of like the old thing about, how many wings can you get off of a chicken? Just you need more chickens to get more wings. And it's the same with cattle. You have fewer cattle head processed. You've got fewer briskets. Now you can make them bigger, but you still got fewer briskets.
A bit of good news out this week. I was definitely surprised to see the release from USDA's National Ag Statistics Service that we're getting the July cattle inventory report back. I would assume you, as a data, I'm not going to call you a nerd, but as a data consumer or a consumer of data, we're also excited to see another data point come back that you've been missing.
Yes. Short answer is yes. I'm really excited to see this come back. I hate that we're going to have this 2024 blip in our data as a data consumer, as you so kindly put it. But yes, glad that it's coming back this year. It's really important, and the county estimates, Meghan, are critical. So this is one of those that Not only is the July cattle report coming back, but the county estimates for row crops and for cattle are also coming back. So this is a really important development, especially where we are in the cattle cycle. This is a time when we need this report. So I applaud USDA NASS for making this decision to bring the report back.
When you think about just kind of that long term and the information provided and where we are in the cattle cycle, does it give producers a little bit of certainty also thinking about what is to come and what where things are in other parts of the country, like one more element and not have to wait 18 months for that information?
Absolutely. And in particular, the heifers, estimate of heifers held for beef replacement, and also the calf crop. That July report, I always looked at the calf crop estimate. You got a mid-year estimate, and the majority of calves hit the ground in the first half of the year anyway, so you could kind of take that and get you a pretty good guess of what the calf crop is looking like for the whole year. That's important right now. It's important every year, but man, it's really important right now as we try to kind of figure out, are we expanding this year? And the calf crop number is, I can imagine, going to be higher this year, but at the same time, we need to have that kind of data as we start tracking this over time, because it's important to markets. It's important to producers who are trying to make decisions. So just really, really glad to see this development, and thankful USDA made this choice.
Josh, we have cold storage out next week, and then the week after that, prospective plantings comes out from USDA. What are you kind of looking at in some of those data, just as a 30,000 foot view for those types of report and the information that comes out from them?
Corn acres. I'm fascinated, interested in what the prospectives planting report is going to tell us about corn acres. Our friends in the row crop world they have tough decisions right now. There's, commodity prices are tough. A lot of the stuff we've talked about on the export side for cattle is even more true on the row crop side. So I'm really interested to see how the crop mix plays out this year. With, of course, the result being what does it mean for corn prices? That's cattle producers and hog producers and poultry producers have obviously a vested interest in what corn prices do. So I want to see the first USDA estimate of how many acres of corn they expect to be planted this year, because I think that's going to be a big driver of not only corn prices, corn markets, but also our expected cost of gain as we start projecting that out into the end of the year and into 2026.
Josh, it's great to see you.
You too, Megan. Have a good one.
You too. To have our weekly livestock market update delivered to your email box every weekend, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.